What are the triggers in the story now? So the near term, from last 1 year, we were anticipating this, and it played out beautifully. So this company had a lot of accumulated losses because of steel. Obviously, those losses went to Tata Steel, and they'll benefit by saving taxes on that. But even here, net worth was completely almost eroded, and they had to. Now they were making 250 and 300, almost 300 crores of cash flows every year from last 2 years, but they were not able to pay out any dividend because the equity was negative. So they had to reorganize their capital. They took shareholder approval, NCLT approval. It took them almost a year. And just last month, they got this approval and they paid a dividend after a gap of 9 years. And this maiden dividend, so to speak, of the new entity after it transformed was a whopping 62 crore rupees. Even at CMP, it translates to 1.75% dividend yield, right? So capital allocation, to my mind, uh, promoter is demonstrating he's mindful of capital allocation and he's taking it very seriously. The second is, as I shared, the brownfield capex will increase the capacity by 50%. Even this year, through debottlenecking, we are anticipating double-digit volume growth. And volume growth is most important because steel prices will go up and down, and the absolute top line will mislead you. You have to just focus on volume growth, and they share volume growth through investor presentation every quarter. So we anticipate volume growth in double digits for next 3 years. FY24 being one with with a step up growth. A better product mix will ensure margins go up. It's entirely the capex is value addition products, and LRPC is also improving in value. What are the long-term triggers? The next gen promoter, the continuing promoter, has 3 daughters, and nobody seems to be involved in operating business. Potentially, this could be an M&A target, and in the hands of a larger global, more professionally run company, this could be valued much, much more. It has been completely out of radar. There is zero sell-side coverage on this business. There is no ownership by DI or FII. A couple of YouTube videos might have come recently. We have already made this on our guest dashboard. I'll share how we have shared a lot of public resources in the last few months on this, which was followed by a couple of YouTube videos and some Twitter threads. But prior to that, practically, we did not meet anybody who was talking about this. And even when we were talking about this, there was no interest. The good part is that management is opening up to investors now with the dividend being resumed at a very healthy rate. We understand they are in the process of shortlisting some IRs, and con calls might start in 1 to 2 quarters, which is when a lot of visibility could come companies' way. Look at how P&L is also transformed. So this was back in 17-18. They used to lose money at EBITDA level. They had a 500 crores of net interest cost. Obviously, at net level, they were losing 350 crores. Market cap was about 1,000 crores. This was their transformation phase. This was their turnaround phase. In FY22, they generated 375 crores of EBITDA, no interest cost as they're debt free. They reported a profit of 270 crores. This is normalized profit. Reported profit is about 300 crores. There was a 30 crores one-off gain. ROE is 17%. Trades at a price to earnings of 13 times, translating into a market cap of 3,600 crores. Okay. This is how I anticipate 2025 to be. The operating profits can be as high as 600 to 625 crores. They will have net income, other income of 50 crores. Net profit could be about 400 crores. ROEs shall expand by 500 basis points because of sales mix change, margin expansion, and being brownfield expansions, there is scope of operating leverage as well. I think for such a business where you're market leader, you're growing, you are debt free, you're paying out decent cash, you're making more than 20% ROE, and there are entry barriers in your business, and you're in a up cycle, Uh, 18 to 20 times is a reasonable multiple to my mind, given the characteristics of this business. And with those reasonable assumptions, uh, I think the market cap can be anywhere between 7 to 8,000 crores, which is twice the current market cap. A big re-rating trigger being the payouts, which can double over the next 2 3 years. Uh, my assumptions, mind it, are reasonable. There are some working capital uh, optimization scope, which I'm not considering here. Their international operations have 6 months of working capital. Because of COVID, it has been really stretched. Once logistics issues normalize, I expect working capital to be further optimized, and that can add 150 basis points to my ROE assumptions, ROE, ROC assumptions. So my number assumptions to my mind are reasonable. At an exit multiple of 18 to 20, we stand to more than double our money in next 2.5 years. What are the